Assalamualaikum warahmatullahi wabarakatuh, and a very good morning, ladies and gentlemen. On behalf of the organizing committee, I would like to warmly welcome all of you, both physically present in Dewan Kuliah 1 and those joining us virtually on Google Meet, to our exciting program entitled The Power of Candlesticks Predict Market Moves with Confidence. We are honored to have with us today a very special guest speaker. Please give a warm virtual and physical welcome to Mr. Ilyas Amir bin Ramli, who is now joining us through Google Meet.
Open nggak camera? Ya memang belum open.
Before we begin, I would like to invite everyone to stand up, either physically or virtually, as we sing our national anthem, Negaraku. Thank you, and please be seated. Next, let us seek blessings and guidance from the Almighty to ensure our session runs smoothly and meaningfully. With that, I would like to respectfully invite Fadlur Rahman to lead the recitation of Dua. Please welcome him.
Al-Fatiha. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alamin. Wassalatu wassalamu ala asyrafil anbiya wal mursalin wa ala alihi wa sahbihi ajma'in. Sesungguhnya kami berhimpun pada hari ini bagi menyatakan kesyukuran di atas kurniamu yang tidak ternilai. Jadikanlah kami hamba-hambamu yang sentiasa bersyukur, sama ada nikmat yang sedikit, lebih-lebih lagi nikmat melimpah ruah kepada kami. Ya Allah, ya Rahman, ya Rahim, Engkau berkatilah, rahmatilah perjalanan majlis The Power of Candlesticks Predict Market Moves with Confidence. Sesungguhnya Engkau maha mengetahui bahwa kami di sini ingin menimba ilmu-Mu yang sangat luas bagi mengembangkan ilmu pengetahuan kami sebagai hamba-Mu yang Engkau redai. Berkatilah penceramah kami hari ini, Mr. Ilyas Amir bin Ramli, dengan kekuatan dan kelancaran semasa dia berkongsi kepekarannya. Ya Zal Jalali wal Ikram, kurniakanlah juga kepada kami kesehatan anggota, kecerdasan minda, ketenangan jiwa, kekuatan semangat. Semoga dengannya kami mampu mendepankan cabaran, berdaya saing, dan mampu mengangkat martabat diri, keluarga, masyarakat, dan negara. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina azabannar. Wa sallallahu ala sayyidina Muhammad wa ala alihi wa sahbihi wasallam. Walhamdulillahi rabbil alamin.
Amin, Amin, Ya Rabbal Alamin. Thank you to Father Rahman for the meaningful recitation. May this session be beneficial to all of us, inshallah. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera, salam UITM di hatiku. Greetings I bid to Yang Berusaha, Mr. Ahmad Fauzi bin Abdul Hamid, the Program Advisor, Yang Berusaha, Mr. Ilyas Amir bin Ramli, the speaker for today, dearest industry players and fellow audience. Welcome to the webinar, The Power of Candlesticks, Predict Market Moves with Confidence. A warm welcome to all participants and our distinguished speaker. Whether you're a beginner or a seasoned investor, understanding candlestick patterns is a skill that can empower your trading decisions. We hope today's session will be both insightful and impactful. Next, it is my pleasure to invite Mr. Ahmad Fauzi Abdul Hamid, the program advisor, to deliver his opening speech.
Assalamualaikum warahmatullahi wabarakatuh and good morning, distinguished guest speaker, Mr. Ilyas Amir bin Ramli, and all respected participants. It is my great pleasure to warmly welcome you all to this exclusive webinar titled The Power of Candlestick, Predict Market Moves with Confidence. Thank you for taking the time to join us today as we dive deep into the art and science of candlestick trading, a powerful tool for making confident and informed market decisions. In today's fast-paced and ever-changing financial markets, understanding candlestick patterns is crucial to identifying profitable trading opportunities and executing trades with precision. This webinar aims to equip you with the knowledge and skills to read candlestick charts like a pro and to trade with confidence. I also like to express our sincere gratitude to Mr. Ilyas Amir bin Ramli, a dual licensed remisier at CGS CIMB and holder of MSTA UK and CFT US certifications, for sharing his valuable expertise with us. I hope this session will be highly beneficial and inspire all participants to enhance their trading strategies and achieve greater success in the financial markets. With Lafaz Bismillahirrahmanirrahim, on behalf of our beloved Rector of UITM Sabah Branch, Associate Professor Dr. Rosita alias Uji binti Muhammad, it is my honor to officially open the webinar, The Power of Candlestick, Predict Market Moves with Confidence. May the knowledge shared today empower you on your trading journey. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh. Thank you.
Thank you, Mr. Ahmad Fauzi, for your inspiring words. Before I hand over the session to our speaker, allow me to briefly walk you through the flow of today's program. We will begin with session 1 of the talk, where our speaker will guide us through the fundamentals and power of candlestick patterns in trading. After that, we'll be having an interactive quiz session via quizzes titled Mastery Peak, a fun way to test your understanding of the session so far. Then, we'll continue with session 2 of the talk, which dives deeper into applying those candlestick strategies with confidence. Following that, we'll open the floor for a question and answer session where you can ask questions directly to our speaker. Finally, we'll wrap up with a short closing, feedback collection, and a photo session before we end the program. So, stay tuned, stay engaged, and most importantly, enjoy the session. Now, let us move to our main agenda. We are thrilled to begin session 1 presented by our guest speaker, Mr. Ilyas Amir bin Ramli, an expert in technical analysis and market behavior. Let's give our full attention to his session.
Okay, I cannot share my screen. So can anyone give me permission to share? Okay. Okay. So just to double check, can you all see my screen? Okay, that's good. Okay. So Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. And a very good morning to everyone. First of all, I would like to thank the organizer for inviting me for this session. So without further ado, let's go to our presentation for today, which is entitled The Power of Candlestick, Predict Market Move with Confidence. Okay, so a little bit on my background. So my name is Ilyas Amir bin Ramli. I'm a dual license remiser for equities and also derivative for CGS International. So formerly known as CGS CIMB, but last year they already split between CGS and CIMB. They split, so now it's only CGS International. So no longer with CIMB. Okay. So I'm also a certified financial technician, certified by International Federation of Technical Analysts or IFTA. So before we start, some disclaimer. So this content is provided for educational and information purpose only. So it does not constitute any financial investment or trading advice. So anything that I present for today is my own opinion, and all strategies, example and tools discussed are for demonstration and learning purposes only. Okay, so it's for education purpose only. And you are solely responsible for your investment decision and should seek advice from a licensed financial advisor or investment professional before making any trading or investment decision. And last but not least, past performance does not guarantee future result. And I want to emphasize that trading is a high risk activities and you can lose money. Okay, so this is our course outline for today. We will start with the history of candlestick, and then I will show to you about candlestick formation on multiple time frame, and we will have a discussion on live market because today is Friday, so market is open, so you can see yourself how candlestick is formed during live market. And then after our 10 minutes quiz, okay, we will continue with popular candlestick pattern and trader psychology. And last but not least, I will show to you how to do real-time market analysis. So I will show to you the live market lah. Okay. So now let's start with the history of candlestick. So a trader named Munihisa Homa, so he is considered as the father of candlestick charting. He was a rice trader from Sakata, Japan that lived during the Edo period, which is in the early 18th century. So what he did was he developed a technique to track price pattern of rice in the Dojima rice exchange market. So that market was the world's very first organized futures market. So what Dojima do is he keep track. He recorded the price of rice and nasi every day. Beras, sorry, not nasi, beras. So he recorded the price every day, and then interestingly, Dojima found something very powerful. Sorry, not Dojima. What is his name? Homa, he noticed something very powerful, and that is he realized that price didn't just move because of supply and demand or weather condition, but price moved because of people expectation. Now, we know that from the law of supply and demand, whenever the demand is high and the supply is low, the prices of a commodity can goes up. Okay, when the demand is low and the supply is high, the price of commodity can goes down. That is the standard law of supply and demand for commodity. But what Homa noticed is that it's not only because of supply and demand, but it moved because of people expectation. So what does it mean by that? It means that whenever people expect that demand will increases later on in future, maybe because of weather condition or maybe some supply disruption. So we expect that demand will goes up in the future. So the price will increase now because people already expect that the price will increase in future because people will start buying now. They don't want to wait until the future when the supply is low or the demand is high, because at that time the price may be already expensive for a commodity. So I give you an example. Okay, in Malaysia, we are the second largest exporter of crude palm oil. Okay, just behind Indonesia. So crude palm oil is minyak sawit mentah lah. Okay, so we are the second largest exporter in the world. So normally at the end of the year, okay, the prices will go up for crude palm oil because we know that at the end of the year there will be raining season in Malaysia. Okay, so there will be flood in the east coast of Malaysia, or even in the southern area, or even in Sabah and Sarawak. Normally we have bad weather condition lah at the end of the year. So normally the price will go up for crude palm oil because there are supply disruption during at the end of the year. So even before that happened, we can see that the trend of the crude palm oil price will go up because of people expectation. Now, Homa trading method were based on a set of principles known as the Sakata rules. Okay, so his method is based on these 5 rules, which is Sanzen, or the 3 mountain, Sansen, the 3 rivers, and Sanku, 3 gaps. And we have Sanpei, 3 parallel line, and Sampo, 3 method. So these 5 rules evolved into many classic candlestick pattern that we know today, that I'm going to discuss with you later on. So we start with Sanzen, the 3 mountains. So this principle mentioned that before a price reverse, okay, normally it will develop 3 peak or 3 clue with let's say if the price is going up, okay, the trend we can see from this chart. Initially the trend is going up, okay, the price is going up. This is the chart for crude palm oil futures, okay, and then we can see that the price is in sideways range and it developed 3 peak. Peak number 1, peak number 2, and peak number 3. So for this principle, Omar mentioned that before the trend reverse, so it will show any signs lah before the price reverse. So after the 3 peaks develop, we can see that the price started to go downtrend. Okay. So the next principle is Sansen, or the 3 rivers. So the 3 rivers or Sansen mentioned that you can see that there are 3 consecutive candlestick pattern. okay, before a price reverse. So this is an example of morning star candlestick pattern, where the first candlestick is a red candlestick and the second candlestick is a small red candlestick or a doji, and the third candlestick will be a green candlestick. So this is part of Sansan principle to detect any price reversal on three candlestick pattern. And the third principle is Sanku or three gaps. So Homa mentioned that for a trend to end or reverse, there will be three gaps that will occur before the trend reverse. So we can see that from this chart, there's three gaps that occur during the downtrend. Then later on, we can see that price reverse. And the fourth principle is Sampe or three parallel line. We can see that this is an example of three black crow candlestick pattern. So there are three consecutive red candlestick. Okay, what it shows is that selling is still dominant. So the price continue its downwards trend after this three candlestick pattern. And the last part is Sampo or tree method. So the tree method mentioned that there's three small candlestick in between of two big candlestick. So in this example, you can see that the red candlestick, the small red candlestick is in between the first big green candlestick and the second big candlestick. So the rising tree method mentioned that the trend will continue its previous trend when this pattern happen. Okay, so fast forward to the year 1980s, Steve Nissen, okay, he was the man who brought candlestick to the West. Okay, so candlestick pattern is only popular recently, about 30 years ago. In the late 1980s, American analyst Steve Nissen, he introduced a Japanese candlestick chart to the Western trader. He wrote a book called Japanese Candlestick Charting Technique in 1991, and it became the standard reference for many traders around the world. So you can find this book, and if you want to analyze in detail more on candlestick, okay, you can buy or find a soft copy of this book lah. Okay. And then Nissen learned about candlestick while working at a Wall Street firm and began teaching and writing about them. So initially, the Western, they did not use candlestick. They are more used to using bar chart and also line chart. They don't use candlestick. Only 30 years ago, so it became popular in the West. Now, why candlestick chart became so popular? And the main reason is because they visualize price movement in a compact and intuitive way. So we can see the open, high, low, and close price. And we can get the immediate insight into market sentiment just by looking at the chart. So you don't have to do complex analysis on the chart to know what is happening at the market. Just by looking, you already know, okay, so there's panic selling or people are buying, okay, or the market is going sideways. Just by looking, you can get an early insight on what is happening on the market. And candlestick chart combine psychology with price action, unlike pure mathematical indicators. Now, if we talk about market psychology, it is the reason why price move. Okay, it is the stories. For example, what is happening between buyer and seller? Are buyers more dominant? Are sellers more dominant? So that is market psychology. Now, for others mathematical indicators, I give you an example. We have a simple moving average or exponential moving average, which calculate the average price of a specific asset. So it only gives you an insight of the average price, and you can compare whether the current price is above average or below average. Let's say if it's above average, meaning maybe the price is expensive, or if it's below average, then the price may be cheap. But it doesn't give you an idea what is actually happening at the market that drive the market, drive the price going up or going down. Okay, let's look at this example. So I have two charts. The top one is a line chart, and the bottom one is a candlestick chart. Okay, this is a chart for light crude oil futures or crude oil, minyak mentah. Okay, so you can see that from May, so this is May. Okay, from May, the price is trending up. And by just looking at the line chart, we can see that the price of crude oil is going up. Okay, and there's nothing much that we can say about this. And we just can say that from the line chart, it's going up. There's not much thing that we can analyze. Yes, we can see that the lowest price for this period is maybe around $56, and the highest price is maybe around $80 per barrel. But that's it. You don't know what's going to happen next. You cannot predict what is going to happen next. Now let's look at the bottom chart. So the bottom chart is candlestick chart. So compared to the line chart, we can have more information what is happening on the market. So for me, if we look at this candlestick chart, yes, we can also see that the trend is going up, same like the line chart. But for the candlestick chart, we have more information. So we can see that from the latest candlestick, they are more selling compared to buying. So sellers start to enter the market at level $76 to $78. So that's why you can see that there's a big red candlestick over here. Okay, and also for the previous candlestick, you can see that there's a candlestick with a long wick on top. So it shows that sellers started to enter the market. So why sellers start to enter the market? Because we know that people will take profit. If they buy low, they will sell high, right? So buy low, sell high, so that they want to take profit, so they are selling. So whenever they are heavy selling, prices will go down. And also because this is a futures market, so there will be short seller entering the market because they believe that maybe this price is already at a high level, it's already expensive, and it is attractive to them to enter short position so that they will buy low later and make profit. Okay, so two charts, same trend, but give you a different stories and perspective. Now, we move on to candlestick formation. Okay, how candlestick can be constructed. So there are two main elements, okay, the body and also the tail. So candlestick body, okay, you can see that this is the body, and the upper and lower line, this upper and lower part is the wick, or some call it as tail. Okay, now the body is from open price to close price. Okay, so the body is between open and close price, it will be a body. And then the wick will be from close price to high price, and also open price to low price. So it will become a wick. Okay, so this is an example of a bullish candlestick. So why we call it bullish? Because the close price is higher than the open price, meaning that during this period of time for this candlestick, okay, the price goes up. Okay, it became more expensive. It goes up because why? Because people are buying. They are more aggressive buyer than aggressive seller. That's why the price goes up. Okay. Now we look at the bearish candlestick. Okay, so the bearish candlestick normally you can see that is red in color, or some platform it is black in color. So for bullish candlestick is green in color, or some platform it shows white color candlestick. Now for bearish candlestick, same like bullish candlestick, you have four price: the high, open price, close price, and also the low price. Okay, I miss out this one. And then you have two part, the body and also the tail or the wick. Now, compared to bullish candlestick, the bearish candlestick, you have the close price lower than the open price, meaning during that time period, the price goes down. Okay, the price goes down and it became more cheaper. So why it happened? Because people are selling. There are more sellers compared to buyer. That makes the price goes down. Now, sometimes people will be confused. When I say there's more buyer or more seller, what do I mean by more buyer or more sellers? What I mean is aggressive buyer and aggressive seller. Okay, so what is the difference? Now we know that human people normally they want to buy low, buy cheap, right? You want to buy something at the cheap price, at the low price, and when we want to sell something, we want to sell at a high price. Okay, let's take an example. If you want to buy house, normally people will complain, oh, now the price of house is too expensive. Because why? Because they want to buy it at a low price. They want to buy low, want to buy everything cheap lah. Okay, but then if you own a house, you want to sell it as expensive as possible, right? So that's nature. That's human. We want to buy low, we want to buy at cheap price, and then we want to sell at a high price. Now, what makes price move is because of aggressive buyer. Now, aggressive buyer is a buyer who didn't want to buy at a cheap price. They don't want to buy low. They want to buy immediately, or they are willing to buy at a high price. Okay, they want to buy at high price because why? Because they expect the price will go even higher. So that is expectation. Okay, even though they see that, oh, the price already increases, I believe that the price will go up even more than what the price that I buy. Okay, so this is what we call aggressive buyer. They are the buyers who don't want to buy low. They want to buy high at an expensive price. Now, this activity will make something, or in this case, our asset, a commodity, the price will go up because of this activity, because of this aggressive buyer who didn't want to buy low. So I give you another example. Okay, so we know that like now there are conflicts in the Middle East, right? So there are conflict in the Middle East, and we can see from this chart, okay, the price of crude oil has been trending up since May. Okay, since May we can see that the price already trending up. Okay, so maybe there are some expectation in the market that there are some uncertainty on the Middle East. So people already start buying. They already start buying So they don't want to buy at the low price. They want to buy at the low price because they expect that the price will go up. And then it goes up, but still people are still buying. Okay, because of why? Because of the conflict. So they are aggressive buyer. They are afraid that if they don't buy now, the price will go up even higher at the later time. Okay, so the same goes to aggressive seller. Aggressive sellers are the seller who don't want to sell high. They are willing to sell at a low price. So normally seller, we want to sell high. We want to sell something as expensive as we can. Let's say you have an asset, you have a gold, you have a car, anything you want to sell, or you run a business, right? So we want to sell something as expensive as possible because we want to make money. But now, because of desperation, because maybe you expect that something bad is going to happen and it will affect the price of that asset. So the owners, the seller are willing to sell immediately. They don't want to hold the asset. I just want to sell at any price. I don't care. I don't care if it's expensive or it's cheap. I just want to sell. So this situation will make the price goes down. So in conclusion, the one who makes the price goes up or goes down are the aggressive buyer who are willing to buy at a high price, and aggressive seller who are willing to sell at the low price. Okay. So now we look at candlestick formation on multiple time frame. Okay. So how candlestick form on multiple time frame? We know that candlestick consists of open, high, low, and close price. Now let's look at this stock. This is Petronas Chemical Group stock. It's stock market. Okay, so for Malaysia, the open price for stock market, sorry, the opening time now is 9:29, so the market is already open. So the opening time is at 9 a.m. in the morning. Okay, so that is the opening time. So before 9 a.m., market is closed. You cannot buy and sell before 9 a.m. So the earliest time that you can buy and sell a stock is at 9 a.m. So 9 a.m. market open. So we can see that from this chart, at the opening time, 9 a.m., the price of the stocks is 3 ringgit and 31 cent. So this is the opening time, sorry, opening price and also the lowest price of the day. Okay, you can see that throughout the day, there are no lower price than 3 ringgit and 31 cents. So this is the lowest price. Okay. So after market open at 9 a.m., we can see that the stock shoot up. The prices shoot up. And the highest it goes is 3 ringgit and 48 cent. That is an increase of 17 cents. Okay. So the price increases 17 cents. Yes, this is in maybe 15 minutes. Okay, the first 15 minutes, the price already goes up to 3 ringgit and 48 cent. Because why? Because people are buying. Aggressive sellers are buying high. They are willing to buy at expensive price. Because why? Because they believe that later on the price can go even higher. Okay, now after the price reach its highest level at 3 ringgit and 48 cent, we can see that the price started to fall. The price started to fall. Okay, because why? Because there are no more aggressive buyer in the market. So the aggressive buyer is only on the first 15 minutes opening time. then there are not much buying activities that makes the price can go even higher. So people are starting to sell. Okay, maybe because they already buy at the low price, so they want to take profit, so they are selling. Now we can see that the price started to price started to drop, falls, and we see that the market closed at 5 p.m. Okay, so at 5 p.m. the closing price is at 3 ringgit and 40 cent. So we know that the price of a stock is not static. When the market open, it will fluctuate. It will goes up, goes down, or maybe some sideways if there's no buyer and seller. But the price is not static. Where the price move depends on the buyer and the seller, which are more dominant. If the buyer is more dominant, then the price can goes up. If sellers are more dominant, then the price can goes down. Okay, so after 5 p.m., okay, let's look at this candlestick. So I have a 1 minute time frame chart. This is also a candlestick chart, okay, but it's on a different time frame. This is a 1 minute time frame, meaning that it will plot a candlestick on every 1 minute time interval. So every 1 minute, it will create a candlestick, a new candlestick. So you know that for this time period, what is the high, low, open and close price for the stock at a 1 minute interval. But from this 1 minute chart, we can also construct a daily time frame candlestick. So from a daily time frame candlestick, so we just need the 4 parameter, which is the open price, the closing price, the high price, and the low price. So from this chart, we can see that the opening price and the lowest price of the day is 3 ringgit and 31 cent. So the open and the low part of the candlestick is at 3 ringgit and 31 cent. Then after that, you can see that the price goes up and reaches the highest price of the day, which is 3 ringgit and 48 cent. So you can see that the candlestick reaches 3 ringgit and 48 cent. But then because of the price drops after it reaches the highest price of the day and close at 3 ringgit and 40 cent. So the body of the candlestick is between 3 ringgit and 31 cent and the close is 3 ringgit and 40 cent. So this part is the body, and from 3 ringgit 48 cent to 3 ringgit 40 cent is the wick or the tail. So this daily time frame candlestick has a body and has a upper wick or upper tail. So it don't have any lower tail because of the opening price and the lowest price is on the same price level. So from this candlestick, from this daily candlestick, you already know what is happening at the market during that day. So you can see that the price increases, okay, because we can see that it's a green candlestick. Okay, the price increases throughout the day, but their heavy selling occurs after the price reach the highest level. So meaning sellers started to enter the market after the price reached 3 ringgit and 48 cent. That's why we can see that there's a long wick over here. The long wick is because of seller selling, maybe because of to take profit. Okay. So the buyers is only dominant at the early stage, on the early stage, but then sellers start to enter. Now let's look at the next example. So this is candlestick formation for crude palm oil futures. So what are the difference? So what are the difference? You can see that the first chart is a stock market chart. Okay, for Petronas Chemical stock chart. And the second example is crude palm oil. So crude palm oil is a commodity. Okay. So both are on 1 minute time frame. Okay, but you can see that for crude palm oil, you have a smoother chart. You have a clearer candlestick chart for 1 minute time frame compared to Petronas Chemical Group chart. Now, why is that? Okay, why? Because in commodity market, normally we have higher liquidity. Okay, higher liquidity meaning there are more buyer and sellers entering the market even in 1 minute time frame. So compared to Petronas Chemical Group, if you look at a 1 minute chart, you don't see clearly the candlestick. Sometimes you can only see a dash, right? So a dash, because why? Because the price doesn't move. The price didn't move during that time. So you can only see dash on this 1 minute chart for Petronas Chemical Group. But compared to crude palm oil chart, okay, so you can see even it's a 1 minute time frame, but you can see clearly the candlestick because of the high liquidity and high volatility. So the price fluctuate more on futures on commodity market compared to stock market. Now, for crude palm oil futures, let's look at this example. So I have a 1 minute chart, and let's look in between 4 p.m. Okay, so 4 p.m. to 4:30 p.m. Now, for crude palm oil, the opening time is at 9 o'clock, 9 p.m. So opening is different from stock market. So stock market will open at 9 a.m. But for crude palm oil futures, the opening time is 9 p.m. on the previous day. Okay, so today is Friday. So the opening time for Friday session for crude palm oil is actually at 9 p.m. Thursday. So last night, it's already considered as Friday session for crude palm oil. So crude palm oil open at 9 p.m. and close at 6 p.m. So the Friday session open at 9 a.m. Thursday, 9 p.m. Thursday, and will close at 6 p.m. later. Okay. So if you have the open price at 9 a.m. and also the high price from 9 p.m. to 6 p.m., the high and low price, and also you have the closing price at 6 p.m., you can construct a daily candlestick for crude palm oil. But now I want to show an example for other time frame. So we have the time period is from 4 p.m. to 4:30 p.m. Now look at this time interval. So in between this time, we have the opening price is at 4,081 ringgit per ton. So crude palm oil futures price is per ton. Okay. Now the opening price is at 4,081 ringgit per ton, and after that the price dropped, okay, to 4,064 ringgit per ton. Now why the price drop? Because of seller. Okay, sellers are selling. They are more aggressive seller compared to aggressive buyer. So you can see that from this candlestick, you have a big red candlestick. So because the sellers are more dominant. Now this is a good candlestick pattern. I will show to you later. Okay, so it dropped to 4,064 ringgit, and later the price increased back, and the highest it reaches to 4,090 ringgit per ton. So after it dropped to 4,064, it goes highest to 4,090, and at 4:30 p.m. the price is at 4,081 ringgit. Okay, even on a 30-minute time, the price fluctuates. Okay, so compared to stock market, if you wait 30 minutes, maybe there's not much difference in price. Okay, maybe the price is still the same for in 30 minutes. But for futures market, the price is more volatile. So even at 30-minute time, the price will be so much different compared to the previous 30 minutes. So now we can construct a 30 minutes time frame candlestick from this time interval. Okay, so during this 30 minutes, the highest price that it reached is at 4,090 ringgit. So this will be the top part of the candlestick, and the lowest price is 4,064 ringgit. So this will be the lowest part of the candlestick, and you can see that the opening price and the closing price both is the same at 4,081 ringgit. So the open and close is at the same level. Now you can see that this is a doji candlestick. We call it as a doji. So it doesn't have a body. Okay, it doesn't have a body. You will only see one line because the open and the close price is at the same level. So what does doji tells you? The doji is a candlestick that shows there are uncertainty in the market. So you don't know whether buyer is more dominant or seller is more dominant during that period of time, because the open and close price is the same. So there are uncertainty. Now let's look at another example. Okay, now this is a chart for light crude oil futures or crude oil. Now compared to these three instruments, okay, the first one we have a stock, second one is crude palm oil, and the third one is crude oil, minyak mentah. So the most volatile is crude oil, minyak mentah. This one is very volatile. In a short period of time, you can see so many fluctuation on the price. Okay, so this is also a 1 minute time frame chart. Okay, we will analyze in between 6 p.m. to 7 p.m. Now, compared to crude palm oil have a longer opening time. Okay, so the market will open from 6 a.m. to 5 a.m. So 23 hours open, only 1 hour break. So crude oil is the most volatile and the longest opening time. But not as long as crypto lah. For crypto, we have 24 hours. This is for futures and commodity. So crude oil has the longest opening time. Now, in between 6 p.m. to 7 p.m., we can see that at 6 p.m., the price is at $72.44 per barrel. Okay, and then the price goes up to $72.84 per barrel. So the highest price during this 1 hour time period is $72.84. Then what happened? After the price reached its highest level, it started to drop. Why? Because people are selling. People are selling because they expect that the price will even drop even more. Or maybe because of panic selling, or just because of profit taking, buyer profit taking, or short sellers entering new position. So after it reaches the highest level, sellers start to be more dominant. Okay, and the price drop, and the lowest price is at $71.85 per barrel. And then it goes up a little bit, and the close price at 7 p.m. is at $71.87 per barrel. Now from this chart, 1 minute chart, we can translate into a 1 hour time frame candlestick. Okay, so for crude palm oil, we construct a 30 minutes time frame candlestick, and for chart, for stocks, we construct a daily time frame candlestick. But for the third example, this crude oil, I will show to you how a 1 hour candlestick is constructed. So from this 1 hour time frame period, we will plot a candlestick whereby the highest price is at $72.84. Okay, the opening price is at $72.44, and the closing price is at $71.87, and the lowest price is at $71.85. So what does this candlestick tells you? Okay, this 1 hour candlestick tells you is that you can see it's a red candlestick. So meaning aggressive sellers are dominant. Okay, people are selling in the market, so the price drop, and you can see that initially the price goes up because there are buying activities initially, but then later on sellers start to enter the market. So that's why you can see that there's a long wick at the top. So indicates that there are very strong selling happen at this price level from $72.44 to $72.84. Sellers start to enter the market. And you can see that there's a very small wick at the bottom. So what does it tell you? So it tells you that seller are very strong and buyer, there's not much buyer in the market right now. Okay, if there are buyers, you will see that there will be a long wick at the bottom. But because of the wick is very short, okay, so there's not much buying, and sellers are still dominant. Okay, so now I will show to you live market. So how candlestick is constructed. So I will exit my presentation. So let's look at now it's 9:50. So crude palm oil is not yet open. So we look at crude oil. Okay, so let's look at crude oil. Now, can everyone see my screen? Okay, I think I need to share a different. Can everyone see? What is my screen showing? My slides or chart? I think it's showing
Your slides, sir.
okay, so I need to show I need to share a different tab. So let me adjust. Okay, so a different tab. Okay, now you can see a different. I'm not showing my slide anymore. I'm showing a chart. Okay, so this is a real-time chart for light crude oil futures, okay, or minyak mentah. Okay, now the top part, the top left part is a 1 minute chart. Okay, you can see here it's a light crude oil futures 1 minute chart. This is the exchange, New York Mercantile Exchange. Okay, so crude oil is traded at the New York Mercantile Exchange. Okay, not in Bursa Malaysia lah. Okay, so it's a global exchange located in US. Now, so the top part is a 1 minute chart candlestick on the left, and the bottom one is a 5 minute chart. Okay, so this is a 5 minute chart. The top one is a 1 minute chart, and on the right side, okay, so this is a daily chart. think I can make it full screen. Not sure how to make it full screen. Okay. Can I make it full screen? Okay, never mind. So the top right side is a daily chart, and the bottom one on the right side is a weekly chart. So for a same instrument, crude oil, we can have different candlestick chart depending on the time frame. Okay, so what time frame to use? So what time frame do you have to analyze all the time frame? Have to look at all the time frame available? Not necessary. Okay, so it depends on what type of trader or investors are you. Okay, for example, if you are an intraday traders, okay, intraday traders meaning you enter and exit a position at on the same day. Okay, you will enter today and also close your position today. So for this case, you may not need to look at a higher time frame chart. So you don't have to look at weekly chart or maybe even daily chart. Okay, so you have to analyze on the smaller time frame candlestick chart. Okay, maybe like 15 minutes chart and below. Okay, but if you are a long-term traders or investor, then you don't have to look at a smaller time frame chart. You don't have to look at a 1 minute chart or 5 minute chart because you want to hold position for a long period of time. So no need to look at a lower time frame chart. So what you can do is you can analyze at the daily chart or even higher time frame. So now let's look at the 1 minute chart. What does it tells you right now? Buyer is more aggressive or sellers are more aggressive. So just by looking at the chart, you can see that the trend is right now going down for 1 minute chart, right? For 1 minute chart, you can see that the price is trending downwards. So meaning there are more aggressive sellers compared to buyers. And if you look at the candlestick size, you can see that the red candlestick is more bigger in size compared to the green candlestick. So meaning sellers are more dominant. Okay. What are the early signs? What are the early signs that you can see from this chart that sellers start to enter the market? Okay. So let me show you, let me zoom out. You can see from here, okay, after the price increases, this is at 7 a.m. Just this morning, 7 a.m. So we know that for crude oil, the market opened at 6 a.m. Okay. So initially the price goes down. You can see that there's heavy selling. I will make it bigger. Okay. So now this is at 6 a.m. just this morning. You can see that heavy selling at the market open. Okay, so you can see that there's a big red candlestick here, meaning people are selling, not much buying. But then at 6:05 a.m., 5 minutes after market open, okay, you can see that there's a red candlestick, but there's a long wick at the bottom. So long wick at the bottom. What does it tells you? Okay, it tells you that buyers started to enter the market. Buyers start to buy because why? We know that buyers want to buy low, and for them, maybe this price level has become more attractive, to them to buy because in their opinion or in their analysis, this price is a good price for them to buy. Okay, now because of the buyers started to enter the market, we can see that the price didn't fall even lower than this price level, which is at 72.58 dollar. Okay, so meaning buyer is pushing the price up. Buyer is trying their best to stop price from going lower. Okay, then we see that the price is trending sideways, and you can see that the green candlestick started to become more bigger. Okay, you can see more dominant buyers entering the market, and the red candlestick became smaller. So sellers are less aggressive, and at 6:40 a.m. There's a big buying happen at 6:40, and you can see that the trend started to goes up until 8 a.m. So just like 2 hours ago, we see that they are still, buyers are still dominant. Okay, we can see that the body is still big, the green body is still big, but the wick at the top is very long. Okay, so what does it tells you? It tells you that there are some heavy selling. Okay, heavy selling is happening at this price level, pushing the price downwards. Okay, now initially the price goes up until 74.29 dollars, but sellers start to kick in, they start to enter the market and pushing the price down. So after that, we can see that the price started to move in sideways in uncertainty whether buyer is more dominant or seller is dominant. We don't see much. Just until recently, we saw that okay, the trend slightly is showing that it's going down. Okay, and the red candlestick is bigger, and now you can see from real time the price started to move down even faster. Okay, so just now we see that the price level is maybe at 73, okay, $73.7 when I just show you this this chart. Okay, but now there's a more heavy selling in the market, pushing the price of crude oil downwards. Okay, so so this is the 1 minute chart. Let's look at the 5-minute chart. So what does it tells you? So almost the same like 1 minute chart, except that you have a lesser candlestick, because the candlestick is will the candlestick is on every 5 minutes interval. So you have lesser candlestick compared to 1 minute chart. So you can, if you analyze the time frame at the smaller level, for example, like 1 minute, you will get so many noise. Okay, that's the disadvantage of chart at a smaller time frame. So what do I mean by noise? Noise meaning like small noise, meaning is a false signal. Okay, you see that there are sellers, but after a few minutes, then you see that the seller started to vanish. Okay, that's what you call as a false signal. But for a higher time frame, you will see a smoother chart, less false signal. Okay, and the signal at a higher time frame is more dominant if you compare to the lower time frame. Okay, higher time frame is more dominant, is stronger in signal if you compare with a lower time frame. Now, okay, so we see on real time. So this is another example. So just now we see that the price is going down, but what happened is buyers start to enter the market. Okay, buyer tries to stop they try to stop the price from going further down, okay, because of selling. So that's why you see that they are a long wick, a long tail over here, and you can see that the price temporarily rebound upwards because of buyer activities trying to stop the price from going down. So this price level is very crucial for buyer. If the price want to continue going up, so meaning it have to maintain at a level higher than $73.43. If the price drop, meaning the buyer is already exhausted. Okay. Now looking at the 5-minute chart, okay, right? So it's showing the same trend. You can see that seller is still dominant. Sellers are still pushing the price going downwards. Okay, only that right now you can see that buyer tries to stop the price from going down. So we can see that the body of the candlestick became smaller, right? And on the daily time frame, so you can see that price started to uh, becomes sideways. You can see that the price is on sideways because previously the price is trending up, but after it reaches this level around 73.6 to 73.9, like I mentioned just now, okay, sellers start to enter the market and they are selling. So because of these selling activities on daily time frame, price stop from going up. And last part is on a weekly time frame. Right, we can see that on weekly time frame, sellers are entering the market as well at a weekly time frame. So that's why you can see that there's a red candlestick over here, but it's not that dominant on a weekly time frame. You only see a small red candlestick, okay, and the wick is also at the bottom part. So meaning that buyer is still trying to push the price going up. So on weekly time frame, I can say that there's maybe a profit taking, okay, due to buyer selling to take profit because they already entered the market at the earlier time. Okay, so it's not very dominant selling on a weekly time frame. All right, so I think I finished for the first part. So we will have our 10-minute quiz. So I pass back this session to our MC for today.
Thank you, Mr. Ilyas, for that insightful sharing. Now, it's time to test what we've learned. Get your devices ready for an exciting online quiz session via quizzes. This segment is called Mastery Peak. Let's see who's been paying close attention. You have 2 minutes left to join the quizzes. One minute left until we start. See in the screen, Najwa is currently reading, followed by Hans with 800 PTS, followed by Infant Christina 8,000 PTS. Najwa is still on top. Fabi is currently on the top too. Ava taking the number one. Shafinas is currently leading, followed by Putri Nur Hasana. Third one is Ava. Let's wait for the final result. We will end this quizzes in 1 minute. Let's see the final result. Okay, the top one is Adriana, followed by Anastasia and Nur Shafinas. Well done, everyone. I hope you had fun and maybe even learned a few things during the quiz. Now, we will continue with session 2 again with Mr. Ilyas Amir bin Ramli. Without further ado, let's continue.
Alright, so congratulations to the winners. Now we continue with our topic for today, and I will continue with the type of candlestick pattern. Okay, so there are three types. The first one is a single candle pattern. Okay, so this pattern are formed using just one candlestick. So just one candlestick, and it provides early signal of potential reversal or continuation. So when we talk about reversal, it means that we want to predict if the price is going to reverse, and continuation is the price will just continue the previous trend. So example of single candle patterns is hammer, doji, or shooting star, which I will show to you later. And the next one is a double candle pattern. So this pattern consists of two consecutive candlesticks, and it often shows a shift in momentum or trend reversal. So these two pattern is normally used for trend reversal. We want to detect any price reversal signal. So the example is engulfing, harami, and also piercing. And the third one is a triple candle pattern. So it is formed by three consecutive candlesticks, and it provides stronger and confirmed signal. For example, morning or evening star, and three soldiers or three crows. Now let's start with the first pattern. So in the previous part, I already showed to you an example of a doji candlestick. So what is a doji? So doji is a candlestick that shows market is indecisive. There are uncertainty in the market, so we don't know whether buyer or seller is more dominant during that time, because the opening price and the closing price is at the same level. Okay, so market is indecisive. So what traders will do is they will wait for next confirmation. Normally we will wait until the next candle. All right, because when the candlestick is a doji, you don't know whether the buyer or seller is dominant. Okay, now it's a reversal type or a neutral type. And for the visual description, you can see that the open price is the same as the close price. Okay, so it doesn't have a body. It's only a wick. Now I'm showing you only the popular ones. There's a lot of candlestick pattern out there, so many of them, but I'm showing the one that is more popular and frequently you can see on the chart. So the next popular pattern is a hammer. We call this a hammer. Hammer is tukul, kan? So this pattern is a bullish reversal pattern. So what is meant by bullish reversal? So the previous trend is a downtrend, okay, meaning the price is going down. But then after you see a hammer, you can expect that the price is about to reverse from downtrend and maybe going up or moving sideways. So it's a bullish reversal type. And for visual description, you can see that normally for a hammer, it has a very small body. It has a small body but a long lower wick or tail. The tail at the bottom is a long tail, and the body is a small body. And the body doesn't have to be a specific color. it can be a red or it can be a green color, but as long as it has a small body and a long tail, we call it as a hammer. Okay, so what does it tells you? What is the story behind this candlestick hammer? So if we look at trader psychology, initially, seller pushes the price down. Okay, we can imagine that the price drop until this level, but then buyers fought back. Well, buyers start to enter the market at this price level. Because why? Because they believe, they expect that at that level, the price is attractive for them to buy at a low price. Okay? And this indicates a signal of potential bottoming and a bullish reversal pattern. So we can expect that the price already reached the bottom, okay, because buyer is already entering the market at a low level. Now, for a hammer candlestick pattern, even though it's a single type, okay, but usually traders will analyze the next candlestick and also the previous one. So you cannot just rely on one candlestick. Okay, you need confirmation. So if you see a hammer, normally we still wait until the next candle. So what's the next candle will do? Okay, from this figure we can see that the third candle, the closing price, okay, for the third candle is higher than the highest price of the previous candle of the hammer. Okay, so this is a buy signal, okay, for hammer candlestick pattern. So you wait until the next candle, then for the next candle, if the candle closed above the previous candle of the hammer, then only you enter buy position. Okay, and so this is a buy signal. And where is the stop loss? Okay, stop loss is compulsory when you are trading because market is very volatile. You can be wrong on your analysis. Okay, so you need stop loss in order to minimize your loss. You don't want to get a big loss. Okay, the rules of trading is that if you profit, you want to make your profit as big as possible, but when you lose, you want to make your loss as small as possible. Okay, because in trading, you can never have a 100% success rate in trading. There's no one that will only get profit. No, so in some trade you will enter some small losses. So your stop loss will be at the bottom of the wick, meaning if the price goes down below the low price of the hammer, meaning your analysis is already invalid. Okay, so maybe it's only a temporary rebound. So after buyer enters the market, then sellers start to push down again prices until the prices goes down way below the hammer's low price. So if that happens, then you have to stop loss. You need to exit the market at a loss. Now, the next pattern is a inverted hammer. So it's just like a hammer, okay, except that it's inverted. In the previous pattern, you have the wick at the bottom, but for inverted hammer, you have a wick at the top. So it's a hammer yang terbalik. Okay. Now, the previous trend is a downtrend. You can see that price is going down. Okay, but then you can see that buyers started to push the price up. Okay, same visual description as a hammer, except that the wick is on top. Okay, so it is a bullish reversal type also. So what does it tells you? It tells you that buying show interest. There's initial buying that pushes the price up. Even though the bear are still there, the sellers are still there to push the price down, but there are some buying interest that pushes the price up at the bottom. So it's an early sign of a momentum shift. So just like a hammer, so you don't wait, you have to wait until the next candlestick develop. You don't by just looking at a inverted hammer or hammer, then you just enter the market. No, that's not the correct way. So the correct way is that when you see a pattern, a hammer or inverted hammer, you wait until the next candle. So it is called the confirmation candle. Okay. So when the confirmation candle closes above the previous candle, okay, which is the candle before the inverted hammer, then only you enter buy position. Okay. So where is your stop loss? Your stop loss will be the lowest price of the three candle, whether it's the first, the second, or the third candle. It will be your stop loss. Why? Because if the price goes down, meaning your analysis is no longer right. You have to stop loss. Okay, you will exit the market at a losing position. Now, this is also a bullish reversal type. We call it as a piercing line. Okay, so piercing pattern consists of two candlesticks. Okay, two candlesticks. So the first one is a black candle or a red candle, and the previous trend is in a downtrend. So meaning price is falling. Okay, then you can see that there's a gap here. Okay, this is what we call gap because the price for the next candle open lower than the black candle close. So there's a gap here. You see that price melompat. It's a gap. Maybe this is at 1 ringgit level, close at 1 ringgit level, but then the next candle open at maybe 95 cents. Okay, so there's a 5 cent gap. So we call it as a gap. Now, after the gap happened, initially we can expect that, oh, maybe because of so much selling, the price will go even down because of the gap. Gaps, if gap happen, meaning that the selling is very strong. Seller is very dominant. That's why gaps happen. But for this pattern, after the gap happen, the price goes up. It doesn't go down. Okay, the price goes up and form a white candlestick, and the closing price of the second candle is above the midpoint of the black candle. Okay, you can see this is the midpoint of the black candle, and the second candle closes above the midpoint. So when this happens, we call it as a piercing line pattern. Candlestick pattern consists of two candles. So the important thing is the gap. Okay? The gap is important. It must happen for a piercing line pattern. If there's no gap, meaning there's no pattern lah. Okay. And then the second important thing is that the second candlestick must close above the midpoint. Okay. So when this happens, what do you do as a trader? You enter the market. Is it? No. You wait for the next candle. Don't immediately enter the market when you see that the second candle is above the midpoint of the first candle, then you started to buy, just buy. No. The correct way to do it is you wait for the third candle. Okay, so still, even though it's a two candlestick pattern, two candle pattern, but still you need to wait for the third candle. So what does the third candle shows you? If the third candle closes above the high points of the first candle, then only it gives you a buy signal. So meaning that there's a high chance that market price already reverse. Okay, because you want to spot reversal. Okay, the previous trend is on a downtrend, then you want to spot reversal. The confirmation is that when the third candle closes above the high price of the first candle. Now, this is a bullish reversal, and the visual description, first candle is a red candle or a black candle. The second candle is a green or a white candle. And don't forget about the gap, and also the closing must be above the midpoint. And what does it tells you? What is the trader psychology? Okay, buyers regain control. Okay, and sellers is already exhausted. Okay, seller is exhausted. Because why? Because when gap happen, there's no more selling. There's no more selling activities after the gap, and buyers start to enter, and it pushes price above the midpoint initially, and then for the third candle, buyer push again the price above the first candle. So buyers are in control now. Next is it's also a two candle pattern. Okay, we call it as a bullish harami. Okay, bullish harami. So two candle pattern. So we have the first candle is a big red or black candle. So this is the first candle. And the second candle is a small green or white candle, which is located inside, in between the high and the low price of the first candle. Okay, so this is a bullish reversal type. There's a small green candle inside the large red. If you learn Japanese, okay, harami, you know the meaning of harami? So harami is a pregnant woman. Okay, so this candle is like a pregnant woman, where the black candles, this is the mother, and this is the baby lah. Okay, so it's a pregnant candle. Now, what does it tells you? Selling pressure slows down and buyer begins to enter. So you can see that initially you have a black candle and the previous trend is a downtrend. Okay, so price is going down, price is going down. Okay, so you still see a black candle or a red candle, but then on the second candle, there's no more selling. The price gap up. Okay, the open price gap up for the second candle. Maybe for the first candle, the closing price is at 1 ringgit, but the second candle, the opening price is maybe 1 ringgit and 5 cents. So there's a gap, 5 cent gap. Okay, example. So why this happen? Because there's no more seller. Sellers are not pushing down the price, and buyers start to enter the market. They are buying big amount of shares or lots. Okay, that makes the price, the candle gap up. Okay. Now, when you see a harami, what do? You wait for the third candle. So even though it's a two candlestick pattern, okay, you still wait for the third candle for confirmation. So if the third candle close above the first candle high, okay, above the mother, okay, then only you can enter buy position, okay, because it signals that the price may be reversed from downtrend to uptrend. Okay, where is the stop loss? The stop loss will be at the low of the first candle. Okay, so let's say if you enter buy position, then the price goes up, but then you don't want to take profit, and sellers start to enter the market back again and pushes the price down, and the price drop to the level of the low of the first candle, then you have to stop loss, because At that time, your analysis is no longer valid. Okay? Your analysis and this pattern is only valid as long as the price doesn't drop below the stop level. Okay? If the price drop below, then you need to redo your analysis. Okay? So because it's no longer valid. Now, what are the traders' psychology? Now, seller selling pressure slows and buyer begins to enter. Okay, because initially you have a black candle. So meaning sellers are still there. But then on the second candle, suddenly the sellers are gone. Sellers are gone. There's no more black candle or red candle. And suddenly the price gaps up. Okay, so it shows that buyer begin to enter and buyer found that this price level is considered attractive to them to buy. Okay, so another bullish reversal type. So all the candlestick that I show just now, except for doji lah, this one hammer, inverted hammer, piercing, harami. Okay, those are all bullish reversal type. Okay, and the next one, the next bullish reversal type is we call bullish engulfing. Okay, bullish engulfing. So it's it looks similar to harami. Okay, looks similar. It's still a two candlestick pattern. Okay, you have the first candlestick, a black candlestick, and the second candlestick is a white candlestick. But the difference are the first candlestick is a small black or red candle. Okay, it's a small candle. And the second candle is a big white or green candle that engulf the previous candle, small candle. Okay, so you can see that the second candle gaps down. Initially it gaps down. So let's say that the first candle closing price is at 1 ringgit. Then the open price for the second candle may be at 95 cents. So the price gap down 5 cents. So meaning there are sellers trying to push down the price but fails. Okay, they sell and the price gap down, but there's not much continuation on the price dropping. Okay, so after the price drop, buyers start to buy aggressively, making the price goes up. Okay, they buy, they're aggressively buying. This time buyer is more dominant than seller, so we have a big white candle. Okay, so what do you do after you found this candlestick pattern? So you wait for the third candle. If the third candle closes above the high of the first and the second candle, then only you enter buy position. Okay, so if the price drop, then your low will be your stop loss. Okay, so the trader psychology is strong buyer momentum overcoming prior selling pressure. So before this, you will have black candle, the price is going down, but then you will see a big white candle that engulfs the previous candle. So that's what we call bullish engulfing. Now, let's move to reversal, bearish reversal type. Okay, bearish reversal. So previously is a bullish reversal, meaning the price is going down, but then you see a pattern. You see a pattern that maybe indicates that the price is about to reverse from going downtrend to uptrend. Now for bearish reversal, so meaning the previous trend is an uptrend, price is going up, but after you found this signal, this pattern, you predict that the price will go down. Now the first pattern is a shooting star. We call it as a shooting star. Okay, so what is the visual description? You can see that a shooting star is candle number 2. Now for candle number 2, you can see that there's a small body and a long upper wick, a long tail at the top side. So what does it tell you? It tells you that initially price go up. Buyers are buying. Aggressive buyer are buying to make the price even higher. But after it reach some level, sellers start to enter the market and pushing the price downwards. So the result will be a candlestick with a long upper wick. Okay. So the psychology is buyer tried to rally. Buyer tried to push the price up but fail. Because why? Because seller took control by closing time. So by closing time, buyer sell. They pressure the price going down and it signals potential top. Okay. So for this candlestick pattern, shooting star is a single candlestick pattern, but for selling signal and also stop loss, you need to analyze same like before. You need to wait until the next candle and you look at the previous candle. Now, the selling signal will only occurs when the third signal falls below the previous candle of shooting star. Okay, you see that the previous candle of the shooting star, if the third candle, the price drop and close below the previous candle, then only you have a confirmation of a price reversal. If you don't wait for the confirmation, let's say you see a shooting star, then you enter a sell position. There is no confirmation that the next candle will be a black candle. Maybe the next candle will also be a white big candle. So you are already wrong. Now, the stop loss will be the highest of the 3 candle, which is the wick of the shooting star. Okay, so this will be your stop loss level. Now, this is a sell signal mainly for futures market lah. For futures market, because in futures you can enter long position or you can buy low and sell high. But for futures market, you can sell first. You don't need to buy first and then you sell. For futures, you can enter short position, meaning you can sell first and then you buy low, okay, when the price dropped. So if the price drop, then you will make profit because you sell at the high price and you buy at a low price. But if you enter a short position, okay, and then the price continue to goes up, then you will lose. Okay, you will lose money. You will not get profit. You can only profit in a short position if you sell first, then you buy low. Okay, so for stock market, you cannot short sell. The stock actually is available, but not for all. Okay, so not for all retail traders. They cannot short stock. Okay, we call it as IDSS. Okay, but it's not available for all. But in futures market, yes, you can enter short position first, then you buy later. And the second one for bearish reversal pattern is a hanging man. Okay, we call it as a hanging man. So you can see that the second candle is a small body with long lower wick. Okay, long lower wick, and it looks just like a hammer. Right, it's look like a hammer, but the difference is for hanging man, okay, it appears after an uptrend, meaning the price is going up. Price is going up, then you see a hanging man. So for a hammer, the previous trend is the price is going down. Okay, it's the previous trend is downtrend. Then only you see a hammer. But if the price is going up and you see this candle, we call it as a hanging man. Now, what are the traders' psychology? Buyer are exhausted. Okay, and sellers start to enter the market at a high price. Buyer tries to push the market, okay, but we can see that sellers start to enter at the high price. And the confirmation will be on the third candle. So it's the same for all candlestick pattern. You always wait for the third one. Now the third candle, if the price, the closing price of the third candle falls below the low price of the first candle, then only you enter sell position, okay? Because this is the confirmation candle. So where is the stop loss? It will be the highest price level of the three candlestick. Normally will be the number 2 lah. The hanging man high price will be the stop loss. Okay. The next bearish reversal pattern, okay, is what we call as dark cloud cover. Okay, dark cloud cover. Now it's a 2 candlestick pattern. Okay, consists of 2 candle. The first one is a green or a white candle, and the second one is a black or a red candle. It is a bearish reversal candle. So what you can see here is that initially you can see that buyer is still dominant, buyer is still buying, aggressive buyer is still buying. So you have a big white candle. Okay, for the second candle, you can see that the price gaps up. The price gap. So the first candle, maybe the closing price is at 1 ringgit, but for the second candle, the opening price is maybe at 1 ringgit and 10 cent. So there's a 10-cent gap, okay, between the closing price of the first candle and the opening price of the second candle. But after the gaps happen, there's not much buying. Buyers are exhausted. They fail to push the price up even higher. Okay, so it gaps, but buyers are already exhausted and sellers start to enter the market and pushes the price down. Okay, so you can see that the second candle is a black or red big candle. Okay, and the closing price of the second candle is below the midpoint of the first candle. Okay, so the trader psychology here is that the buyer or the bulls are exhausted, they lose steam, and seller gains strength. They are more aggressive now compared to buyer. So you wait until the third candle. If the third candle close below the first candle low, then only you enter short position or it's a sell signal. And your stop loss will be at the high of the second candle. Okay. Now, the next one is bearish harami. Okay. Bearish harami. So harami, a pregnant woman. So it's similar to bullish harami, except that this is a bearish reversal. So meaning that the previous trend is price is going up. The previous trend is price is going up, and then you see that the second candle is a small red candle inside a large green candle or a white candle. So it shows that the buyer are exhausted, okay? The buying strength fades and seller started to enter the market. Now, when you see bearish harami, so you need to wait for the third candle. Okay, the first candle will be your stop loss, and the third candle, if it falls below the low price of the first candle, then only you enter short position. Okay. So what's the difference between bearish harami and bullish harami? If you see bearish harami, the first candle is a white candle, okay, white big candle, and the second candle is a black candle. So it's the same. Initially, you see that buyers are buying, okay, and pushes the price up, but then the price gap down. Let's say the closing price of the first candle is at 1 ringgit, then the opening price of the second candle is at maybe 90 cents. So the price gap down on the second candle, showing that there are sellers selling into the market. And the second candle must be inside the green candle. Okay, that's why we call it as a harami. Now, the next pattern, okay, is an engulfing. Engulfing, bearish engulfing. Okay. So bearish engulfing is also a 2 candlestick pattern. Okay. So it's a bearish reversal. You can see that the second candle, which is a large red candle or a black candle, fully engulf the previous green candle. So the first candle will be a green candle, and the previous trend is uptrend, meaning previously the price is going up. Okay, then you see a black candle or a red candle engulf the first candle. So it's a bearish engulfing because sellers start to be more dominant after the price gap on the opening price of the second candle. The price gap up, but then there's no more buyer entering the market or pushing the price go up. So buyers start to become more aggressive and pushes the price down until it became even lower than the low of the first candle. So it fully engulfed the previous candle. So this is what we call as a bearish engulfing. Then what do? You wait until the third candle for confirmation. So if the third candle closing price is below the low of the second candle, then only you enter sell position or short position, and the buy stop loss will be at the high of the second candle. Okay. So you can see from here that seller overwhelm buyer bullish momentum. Okay, initially you have buyer, it's more aggressive, but then suddenly there's heavy selling. Heavy selling occurs. You can see the very big dark black or red candle engulf the first candle. Okay, so these are all the popular candlestick patterns, right? So how many are there? I give you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 candlestick pattern. So these are the one that is the most popular, and you can find it easily on a chart. So actually there are many more. Okay, there are so many candlestick pattern, but some are, you can see on the book, yes. On theory, yes, you can see that there's so many candlestick pattern, but when you look at the live chart in live market, it's very hard for you to determine what pattern are the candlestick. Okay, so I'm showing you the 11 most common, and you can easily find it on a live chart. This 11 patterns. So let's go to our chart. So just exit. and I share my chart. Okay. Okay. So now it's very easy to do candlestick analysis. You want to guess why? It's very easy. Not like Homer lah, 300 years ago. He need to plot, okay? He need to plot all the daily prices of rice. Then only he need to find pattern. Now it's very easy because we have charting software like TradingView or any other charting software. So this software, they have features to spot any candlestick pattern that we learn. So you just need to use that features. Okay. So that's one thing. Another one is because now we have AI, so easy. We have ChatGPT and others. You can just paste the chart on ChatGPT, then ask them to find the candlestick pattern, so it can do it for you. So nowadays it's very easy. Okay. Now, can we see any pattern that I've shown you just now? So let's look at crude palm oil. So previously I've shown you crude oil. For this time I will show you crude palm oil. Okay. Now, do you see any pattern? Any pattern that I discussed with you previously? Okay. So by just looking at the chart, I can see so many patterns. Right. Let's look at crude palm oil 1 minute chart. Okay, 1 minute chart. Right. So 1 minute chart, crude palm oil, I can see a doji. Can you see a doji? There are so many dojis here. So we have doji at 10:55 a.m. Okay, because now it's 11 o'clock. So crude palm oil futures market is already open. So here we have a doji. Here also we have a doji. And this pattern, we have a hammer, right? It's similar to hammer, except that a perfect hammer doesn't have a upper wick, like I show you just now. It only has a body and also a lower part of the tail. But sometimes you can also have a short wick lah, on the top side. So I still consider it as a hammer. But the most important thing is for you to understand the market psychology. Okay, if you see a hammer, then what it tells you is that initially the price goes down, okay, until it reach this level, which is 4,112 ringgit. But then, why? Because sellers are selling. Seller push the price down, okay? But then buyers start to enter the market. Buyer try to stop the price from going further down. So that's why you see a long tail over here at the bottom. Now, if you remember what I told you just now, we need to wait for the third candle. So meaning the next candle, what will happen? Okay, so what will happen? So you see, even after we see a hammer over here, but for the next candle, there's still heavy selling happen. Alright, so there's no buying signal over here, even though that you see a hammer. Alright, so compared to this part, this one, okay, this is last night, okay, at 11:09 p.m. Alright, last night at 1 minute time frame, we can see that initially the price dropped, Okay, so the price drop because of what? Because of sellers selling. Okay, why sellers are selling? Maybe because they are profit taking activities or they want to enter short position. So they sell and the price goes down until you see a hammer at 11:09 p.m. So the price reach a low of 4,124 ringgit level, but then buyers start to push the price up. Okay, because why? Because for them this is considered as cheap, and based on their analysis the trend is still on the uptrend, it's still going up, so they enter long position or they buy, okay, to get some profit later on for them to sell at a higher price. So just by looking at this, you can see that for the third candle, okay, the third candle, the closing price is at same level as the high price of the first candle. Okay, so the third candle gives you a buy signal because the closing price is the same or even higher than the high of the first candle, right? So where will be your stop loss in case your analysis is wrong or market doesn't move as your prediction? So this will be your stop level. So let's say you enter buy position on the third candle or the fourth candle. If the price drop below the low of the week of the hammer, then you need to stop. Okay, you need to cut loss. You will exit the position at a loss. But what happened last night is after the hammer appears, the price continue to go up. Okay, so anyone who enter buy position because of this hammer pattern and also wait for the third or fourth candlestick and they decide to enter long position, they will gain profit because price goes up. Now, so the market closed at 11:30 p.m. Okay, for crude palm oil, they stop. They close at 11:30 p.m. and resume at 10:30 a.m. Okay, so between this time, in between 11:30 p.m. to 10:30 a.m., there's so many things happen around the world. Okay, you have crude oil market still open, you have soybean oil market. Okay, there are factors that happen and can make the price goes down. Okay, because the global market is still open, but our market already closed at 11:30. So what happened at 10:30 a.m.? The price gap down. Okay, so this is common for crude palm oil. Okay, they will gap every morning. So it is considered as a very tough instrument to trade because of the gap. Now, so we can see hammer here. So there's two hammer. So the next one I show you, it's like a hammer, also like a hammer, except that it doesn't have a body, right? So we call it as a doji, but there's a specific name for this doji. It's a dragonfly doji. Okay, the dragonfly doji is a doji, but it has a long lower tail. Okay, so it's similar with hammer, right? So what does it tell you? It tells you that initially the price drop. Okay, the price is going down because you can see that the previous candle is also a red in color. So sellers try to push the price going down even further, but until it reach 4,102 ringgit, buyers start to enter the market. okay, buyers they try to stop, they try to absorb the selling pressure. Okay, buyers start to buy. So the result is the price are no longer going down. So now we consider it as a sideways trend. Okay, it's on sideways. It's not moving up, it's not going down, but it's it is sideways. Okay. So that's a hammer. So let's see if we can find other candlestick pattern. Okay. Okay. So this is no. Okay. So the easy way, the easy way to find candlestick pattern is basically we can use technology. Okay. So because nowadays the software are very advanced, so there are features to find pattern. What you can do is just turn on this pattern, but you still need to do the checking. Okay, you cannot just rely on the system. Okay, still need to do some checking. So I will show Harami. Okay, we have bullish Harami and also bearish Harami and engulfing. So where is engulfing? Bearish and bullish engulfing. Okay. So because this software detects based on algorithm, so it can be wrong. So you still need to do some checking. Okay. All right. So I can see a bullish engulfing here. Okay. So there's a bullish engulfing here. Right. So bullish engulfing. So we know that for bullish engulfing, we have the first candle is a red candle, okay, or a black candle on some platform, and the second candle is a green, okay, a green candle or a white candle, and the second candle must engulf the first candle, meaning the first candle high and low price is inside the second candle. Okay, you can see that the previous trend is downtrend. The price is moving down during this time. Okay, but then when you see a bullish engulfing, okay, this is a one very big green candle, very dominant buyer here appears at the bottom, and you look at the second candle or the third candle or the fourth candle, the price is still going up, so it shows you a buy signal. Okay, and later on, as the price move, we can see that the highest price that it reached after the bullish engulfing appears is at 4,122 ringgit. Okay, initially the price is at 4,082 ringgit, so there's an increase of 40 ringgit. Okay, after the engulfing, bullish engulfing appears. So where will be your stop loss? Your stop loss will be at the low of the second candle. Okay, let's say if you enter the market here, but then it doesn't go according to plan, according to your plan, and the price continue to drop, you need to stop loss. Okay, you need to exit the position, your position at a loss. Okay, so so this is a bullish engulfing. So let's see if I can see any other pattern. Okay, so this is also a bullish engulfing, but not really a perfect bullish engulfing. Okay. Right. So in reality, it's not as easy as it's not as easy to spot a candlestick pattern. Okay, so using technology can helps you. Okay, and it also depends on what type of market you are trading. So if you are trading futures market, so you can see many candlestick pattern. So I will show you stock market. For stock market, yes. So this is tenaga. Okay, so there's some very interesting pattern here. Okay, so this is tenaga or TMB. Okay, TMB stock. Alright, TMB stock on daily time frame. So this is a bearish and bearish harami. So this pattern is a bearish harami. You can see it's a bearish harami. Alright, so the first candle is a big green candle. Okay, the first one is a big green candle and the second one is a small red candle. And the second candle is inside the first candle. So this is the mother. And the mother and this is the baby. Alright, so the price gap down. Okay, the price gap down. For the second candle, the opening price is 14 ringgit and 52 cent, but the close price of the first candle is at 14 ringgit and 60 cent, meaning the price gap 8 cent, gap down 8 cents. Okay, so what does it tell you? It tells you that there are no more buying. Okay, because price gaps down, sellers start to enter the market. Okay, so after you see the bearish harami pattern, you wait for the third candle. So for the third candle, it still doesn't drop below the first candle. Okay, it is still inside the first candle, so there are no selling signal here. So, but the pattern is still valid. Okay, because why? Because the price doesn't go up above the first candle. So the sell signal only happen on the this is the third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th candle. So the signal is on the 11th candle, where the 11th candle, the price goes down below the first candle. So this one is a strong selling signal for tenaga. Okay, and you can see that after this selling, the price dropped even more. And you can see that because of the body of the candlestick is very big, it shows you that during this time there are so much heavy selling is happening on the market and people are not buying, maybe due to news or bad sentiment that happened during this time. Okay, and you can also see a candle like shooting star over here. Okay, you know that shooting star is a candle which have a long upper wick. Okay, long upper wick, except that for this candle, it also has a lower wick, but it's just a short lower wick. So to me, I still consider it as a shooting star. Okay, but in theory, shooting star doesn't have a lower wick. Okay, but the most important thing is not to memorize the names of the candle or the pattern. It's not important to know, oh, this is bullish harami, this is bearish harami. The most important thing in candlestick analysis is to know what are the stories behind the candlestick formation. So we know from this pattern, okay, initially the price goes up. Okay, it reaches to a level of 14 ringgit and 44 cent. Okay, compared to the opening price, it is at 14 ringgit and 8 cent. So there's an increase of 36 cents during this day lah. Okay, so the price it increases initially, maybe in the morning. Okay, but later in the afternoon, sellers start to enter the market and push the price down. So buyer became exhausted. Okay, they only appear at the beginning, but now They are no longer buyer in the market. They fail to hold the price at a high level because sellers start to enter market. Seller is pushing the price down. They are selling. Aggressive sellers are selling. They're selling until the price drop to a level of 14 ringgit and 10 cents. So in this price level, we can say that at this price level, we can say that sellers are still dominant compared to buyers. And we can see that after a few days, the price are still going down. Okay, so the most important thing is not to memorize the names of the candlestick, but you need to know the stories, what is happening behind the candlestick formation, whether buyers are still in control or sellers are more dominant. All right. So I think that's it for my presentation for today. So we are going to have our Q&A session. So I will pass back this session to our MC.
Thank you once again, Mr. Ilyas. We are now open the floor for our question and answer session. Let's start with the online audience. Feel free to type your questions in the chat box or turn on your microphone.
Hello, Mr. Ilyas.
Hello.
Hello. Okay. My name is Shida, and I'm from Bachelor of Degree in Finance. My question is: are there notable differences in how candlestick patterns behave across forex, stocks, and cryptocurrency markets? Thank you.
Okay. So, all right. So this candlestick, okay, the concept is the same for all market. Okay, the concept is the same, and you can use candlestick analysis on all asset, including cryptocurrency, futures market, and also stock market. But each asset will have a different behavior. If you are familiar with stock market, like I show you just now, if you zoom in into a smaller time frame, you will see that there's not much liquidity and volatility on the stocks movement. Okay, but still you can use candlestick analysis, okay, in any asset as long as they have opening price, high price, low price, a closing price. You can plot the candlestick chart. You can have a candlestick chart and do the analysis. But bear in mind that different asset we have different behavior. Okay, like I tell you just now, okay, crude oil will be the most volatile. So when it at a volatile market, okay, candlestick analysis will be more accurate compared to not volatile market. Okay, because if you look at stock market chart at a 1 minute level, you can only see a dash. Okay, and the candlestick is not smooth. The candlestick chart is not smooth. But in theory, yes, you can use on all market, and it's available on all market. All right. Does it answer your question? Okay.
Yes, Mister. Thank you.
All right.
Mr. Ilyas, there's a question in the chat box, which is the question is if I want to learn more about stock market, how to analyze and so on, where to find the class? Yeah, do you have any recommendation?
Uh, I- okay, I'm not sure if I'm allowed to promote any classes in this webinar, but in general, if you want to learn more about stock market, you can always go to Bursa Malaysia website. Okay, Bursa Malaysia website, and they organize a webinar on daily basis. Not daily, monthly basis lah. There are so many webinars conducted by Bursa Malaysia that you can attend, and it's a free webinar. You can start from there just by attending Bursa Malaysia's webinar. So you can just look at Google lah, search at Google Bursa Malaysia website. Okay. Or I add or because I'm also a remiser for CGS International. You can also maybe follow CGS International social media, and because CGS also conducting so many webinars on stock market, so you can learn from there.
Hello, my name is Sakina, a student from BA 272, Bachelor of Business in Finance. So my question is, to what extent can investors rely on candlestick patterns without falling into confirmation bias over fitting historical data?
Okay, that's a very good question. Okay, so in technical analysis, there is no what we call as holy grail. Holy grail meaning the perfect technique, okay, to do analysis. If you use that technique, then you can always be right. There's no such thing as that technique in technical analysis. So what does technical analysis do is actually it is a framework. It's a framework. Okay, it's a SOP. Meaning if you see this pattern, or if you see the trend, the pattern, then what you need to do. Okay, what is your entry price and what is your exit price, what is your stop loss. That is what technical analysis do. It is a framework. So in terms of accuracy, it depends on your knowledge, on your skills, on your strategies. So you need to do some back testing, okay, and forward testing. So if you have a strategy, you can do back test to measure the accuracy of that technique. Okay, for example, like most common technical analysis technique will give you an accuracy of about maybe 40 to 50%. So there's a 50% chances that you will be wrong. Okay, and there's a 50% chances that you will be right. But then what you can do is you can optimize your strategy, okay, to make it higher, or maybe 60% or 70%. Okay, from my experience, the highest that I can share with you is what I found is around 70% accuracy. But that needs a lot of optimization on the strategy. So you cannot just rely on one analysis only. Okay, you need to optimize and backtest your strategy to get a more higher accuracy.
Okay, Mr. Ilyas, there's one. Last question from Akida. Um, do you think stock market still relevant even now, or do you prefer in Malaysia stock market?
Okay, do you think stock market still relevant? Stock market is always relevant to me. Okay, because of what is market actually? Stock market is a stock of a public listed company. Okay, as long as they are business, as long as people are running business and business are making profit, okay, so stock market um, will be relevant. But different stock market, if you compare different stock market, there will be different performance lah. For example, for like now, Malaysian stock market is quite slow. Okay, maybe due to the lack of fundamental reason. Okay, you need some fundamental factor to make the stock market high. Okay, so it's not just because of supply and demand, but there are economic reason as well and fundamental factors for the price of stock to goes up. Okay, if the company is making profit, is having good business, our economy is good, our politics is stable, okay, then only our stock market can go even higher. But if there are not much catalyst, and we call it as catalyst, not much catalyst in the economy, so the stock market will be quite slow, because businesses will be slow and not making much profit. But if you compare with other stock market, for example, like in the US stock market, their market is even bigger. Okay, they have the big company like Meta, like Google, Alphabet, okay, like Amazon. So over there, the stock market is even bigger, because the company over there is their market is not only in US, so their market is the all over the world. So their profit is much bigger than our company in Malaysia. Okay, so if we look at other places, foreign stock market, you can see that there are stock market that are still performing right now. Only that our stock market is quite slow right now because of lack of catalyst.
Thank you everyone for the insightful question. Alhamdulillah, as we near the end of today's program, I would like to sincerely thank everyone who made this event possible, our organizing team, our advisor, and most of all, our brilliant speaker, Mr. Ilyas Amir bin Ramli. To all participants, we hope you leave this session more confident and informed in reading market signals using candlestick patterns. Before we wrap up, we kindly ask all participants to fill in the feedback form that will be distributed shortly. Your comments and suggestions are valuable in helping us improve future programs. Before we bid farewell, I, Pirhamna binti Haibal, your MC for today, humbly ask for forgiveness for any shortcomings on my part. And with that, we officially conclude the Power of Candlesticks webinar. We will now proceed with a short group photo session, both physically and virtually. Please turn on your cameras and gather for the final photo. Once again, thank you and have a productive day ahead. Wabillahi taufiq wal hidayah. Wassalamualaikum warahmatullahi wabarakatuh and goodbye. Hello?
Sudah. For the online audience, you may open your camera for a photo session. Boleh kan nih, kejap ah. Kasih begini, kasih masuk si Sir. Tidak nampak si Mr. Ilyas. Oke. Oke, 1, 2, 3. 1, 2, 3. Oke, selfie. Oke, 1, 2. Oke. Freestyle dulu tadi. Oke. 1, 2, 3. 1, 2, 3. Style. 1, 2. Oke. Last video kan? Okay, thank you everyone. You may leave the Google Meet right now. Ya, biarlah kita aja.
Dia tengok siapa yang lambat keluar, dia tidur.
Biarlah kita aja yang take video tuh.